Well, the RBA's left the cash rate on hold at 4.35%. We're waiting for the cut, but we didn't quite... we sort of got a little bit more information from the RBA in the sense that it wasn't explicit about hiking interest rates like they have been in the past. But what does it mean for the property market? Is everybody just waiting here to see an interest rate cut and then inevitably see the Sydney property market especially just fire on all cylinders again? Well, Scott Kuru is the founder and CEO of Freedom Property Investors and a proud sponsor of 2GB Drive. He's on the line. Scott, g'day.
G'day, Chris. Great to be here. We were expecting this. Everyone's pretty expecting this. We won't see the rates really start to come down until the unemployment rate starts to go up. But when that unemployment rate goes up, it could move up pretty quickly. We are in a per capita recession right now. So we're in a sort of a technical per capita recession, which means Aussies are spending less. We are doing a lot less. The economy is much slower. The whole world's in a recession. We'll follow suit. So as we get closer to that point over the next 6 to 9 months, we will see those rate cuts come through.
Do you think that will have a fairly obvious impact on the property market, especially here in Sydney? If people have got higher borrowing power, they spend more money on real estate, right?
Yeah, they will. They have more borrowing capacity, so first-home buyers and investors will try and jump in. Two interesting facts, though, Chris, for your listeners that they may not know or hear anywhere else. One, 25% of all properties purchased in New South Wales in the last 12 months were purchased in cash. And these are predominantly, people that are retiring, that are selling their main home. Downsizing, potentially buying a home that they move into, maybe buying 1 or 2 investment properties to have the cash flow there to sustain them in their retirement. And we are starting to see overseas buyers come into Sydney more than what they have over the last 4 to 5 years, despite the government almost tripling the stamp duty that they've got to pay on those properties. And this is all in anticipation that our property market will continue to grow in value.
And is that because you're seeing such issues with the real estate market in mainland China and it's cashed up Chinese coming to Australia and they think it's a safe place to park that money?
China is a communist country. In China, you're not allowed to own anything. I mean, we've got some political parties here in Australia that would like that. But people love to own things and work for things, buy them and own them. And the Chinese are also like that, like any human. They can buy a property in Australia that they own. Anything they buy in China, the Chinese government essentially owns it.
Sure.
So they're trying to get their capital out of China as much as possible.
For more videos like this, please click like and subscribe for more information around the property market. Thank you.